its host, Anderson Cooper, was attacked. Amidst the violence, internet service in Egypt has been restored. All of this after Hosni Mubarak said last night that he would not seek re-election later this year. Apparently not quite good enough for the protesters. Joining us to talk about the impact on the markets, with me here in studio, Alex Jershevsky, founder and managing partner at Recovery Partners, and from Philadelphia, Jonathan Lemko, principal and senior sovereign analyst at Vanguard. Good to have the two of you guys with me today. Alex, first of all, to you, Egyptian TV is now reporting that 350 people have been hurt in today's protest. What kind of impact is all of this having on financial markets right now?
Well, right now, I think the impact is still somewhat muted. You're not getting, I think, the full realization of what this could potentially mean, but this is another domino, another U.S. domino in the Middle East that appears to be poised to fall, and how it's going to work out is anybody's guess. You are going to get, how this works out, I mean, could have significant impacts on oil markets, on share markets, and on investment flows into that region. Egypt, for example, is a recipient of about $6 billion of foreign direct investment a year. This is certainly going to impact that. It's certainly going to impact stability in the region generally, and it's not clear who actually is going to emerge in charge in that country, and there could be some fairly wide-ranging political and economic impacts that are not necessarily only confined to the region coming out of this.
Jonathan, what are you watching right now, and how could this impact financial markets?
Well, I'm looking at a couple of things. One, I'm looking at the bond market, where, of course, I work, and so far interest rate spreads have widened slightly, but only slightly. I think very important is going to be when the Egyptian stock market and the Egyptian banks open, which could be as soon as tomorrow, although it might be another day or so. And it'll be very interesting to see if there's an exodus of capital from the banks and if stocks go down pretty dramatically. We do know that prior to the current round of uprising, if you will, or riots, about $1.5 billion worth of U.S. dollars foreign investment had left Egypt. They've got about $32 billion in foreign currency reserves, which should be a comfortable cushion. But some of that is going to have to be spent going forward, and it'll be very interesting from a market perspective to see what in fact happens. I'm going to be watching very closely to see what happens with the banks and the stock market tomorrow.
Alex, what do you think will happen when the stock market opens there? Do you see a flow out of capital?
Well, yeah, I think it's baked into the cake. I mean, the banks have all been downgraded by the rating agencies. Sovereign credit has been downgraded by the rating agencies.
Still not as bad as Portugal. The CDS numbers are 340 for Egypt, 399 for Portugal.
Well, it's hard to know what's going to shake the markets these days. It seems the markets are trying to put a rosy tint on everything, but this is definitely not good. It's not going to be good, and it's really a question of the uncertainty. It looked for a while like Mubarak's son was slated to be the successor, and now it's not clear if anybody's slated and if there's any proper process in place to have a transition here. But it looks like a transition may come sooner rather than later.
Do you expect prices on energy to go up, though, as a consequence, at least in the short run? I've been seeing food prices absolutely skyrocket. In fact, if anything, that's what precipitated the current riots in Egypt. That was the biggest deal, right?
Well, yeah, I mean, here we're looking again at one of the second-order effects of QE, which has been a run-up in commodity prices. You've got 20% of the Egyptian population is surviving on less than $1 a day. Egypt's one of the biggest wheat importers in the world.
Explain how QE2 quantitative easing affected.
Well, you've got huge amounts of liquidity sloshing around in the system, and it's looking for a home. And a lot of that liquidity has gone into share markets around the world, and a lot of that liquidity has gone into speculative investments in commodities. And commodity prices have had a tremendous run-up because of the excess U.S. dollar liquidity. What it really is signifying is a devaluation of the U.S. dollar in commodity terms. But for people that are surviving on $1 a day, if the price of wheat doubles, that's a significant impact on their lives and on their well-being. And that, in fact, is what precipitated the riots in Tunisia. And it's got part of the reason for the unrest in Egypt is also related to the fact that food prices have been going through the roof.
Just about a minute till we go to break. Sorry, go ahead, Jonathan. Go ahead.
Well, I'm just going to say, I suspect if you ask the overwhelming majority of people in the streets at the beginning, why are you out there? It's because wheat prices are at quadrupled in a short period of time. Sugar prices, highest in 30 years. You could go on and on.
Yeah, exactly.
Okay, we're back with Alex Drashevsky here in studio of Recovery Partners and Jonathan Lemko of Vanguard in Philadelphia. Let's talk a bit about the EU. On Friday, there's a meeting and the possibility of expanding the Eurozone's bailout fund. Alex, do you think that would be a good thing? And what would it be expanded to if they expanded it?
Well, my. You know, when they first set up the EFSF, they basically said it would never need to be used. And now they're talking about making it larger. You know, the EFSF is really a fiction, because what it is money that hasn't yet been borrowed on the credit of countries that are stronger credits in the EU, and it's designed to bail out the weaker credits. Longer term, this process can't survive. I mean, it's not a durable process, and I think that they are going to probably jack it up in order to demonstrate to the markets that they're serious about curbing the contagion. But in my belief is that the sovereign debt crisis in Europe is far from over, and the EFSF is nothing more than a Band-Aid.
That's the European Stability Fund.
The European Financial Stability Fund. It may become a larger Band-Aid, but it ain't gonna work long term.
What's your view, Jonathan? Do you think they'll expand it, and is it a good thing if they do?
I think they'll expand it, and from a market perspective, it's a good thing in the short run. It'll be somewhat reassuring. I think longer term, I think we're going to see ongoing muddle-through scenario. I think the risk of a substantial restructuring, that is default for a Greece, remains very high. I do.
About Ireland, I'll throw this one to you, Alex. There's an election February 25th. The coalition there, on the other side of Mr. Cowan's political persuasion, they're going to go after the bondholders. At least they say they're going to go after the bondholders because the taxpayers have been shouldering the burden. Are the bondholders going to have to take a haircut ultimately?
Well, what I've been saying for some time is that the solution for Ireland is not a durable one. The taxpayer is not going to bear this. They don't want to become tax slaves to the bondholders. And I do believe ultimately there's going to have to be some sort of financial restructuring involving haircuts there.
So 20 cents on the dollar? Is that
who knows? Who knows? It's going to be a function of who negotiates this, how it comes about. I don't think right now you've got a stable political alliance on the other side of the aisle politically in Ireland. The biggest party on the other side of the aisle is Sinn Féin. And so I think it's going to take some time for a leadership group to emerge and coalesce around the objective of throwing this millstone of debt off the necks of the taxpayer. It's not going to happen as a consequence of this election, though. It's going to longer-term process.
Okay, gents, we have to leave it there. Sorry to cut this off. Lots more to talk about, but we'll have you back. That's Alex Drashevsky of Recovery Partners and Jonathan Lemko of Vanguard in Philadelphia.